This cycle, it's more of a dilution driven price action. And that is enabled by these wide open capital markets. I'm not so sure that the end result won't be the same, which is a fair bit of a hangover for equity investors who are piling into companies that are trading at very high multiples relative to the Bitcoin that they already hold. I'm worried about the next few months as some of these new shares become unlocked and can be sold by some of the early funders of these new treasury strategies.
Over the past year, one of the most overlooked yet transformative shifts in the Bitcoin ecosystem has been the rise of corporations, both public and private, as a dominant class of buyers. According to Matthew Sigel, these corporate entities have now overtaken even ETFs in terms of net Bitcoin accumulation. Over 350,000 BTC have been acquired by corporations in the past 12 months, with more than 100 added in 2025 alone. This isn't just another bull cycle, it's a structural shift in who owns the future of money.
And before that, be the one who says, I was here before 100K. I'm on a mission to hit 100,000 subs before 2025 ends. Help me get there. Subscribe now and drop your thoughts on the market in the comments. Let's grow and win together.
In the last 12 months, corporates, so public and private corporations led by MicroStrategy, have now surpassed ETFs as the largest buyers of Bitcoin. These corporates have bought more than 350,000 Bitcoin over the last 12 months. More than 100,000 of that has been added just year to date. We count 21 new Bitcoin treasury companies just launched in the last 30 days through June 11th. The MicroStrategy's strategy has now been, I'd say, legitimized by a number of kind of cash-rich, slow growth corporates. That's for whom this type of strategy, I think, is most applicable. The benefits of this is that the equity capital markets are now wide open for anything crypto related. So after the election, a lot of investment banks started looking into underwriting these types of deals, and the kind of traditional Wall Street stock picker is now more open to these types of stocks. And you can see it in the performance of the Circle IPO, for example, which is up again sharply today. If we look at the past cycles for Bitcoin, they all tend to kind of, the end of the cycle is marked by a leverage-driven kind of blowout of parabolic price performance. It's very dangerous when it's leverage driven, and nearly every lender in the last cycle went bankrupt, whether that's kind of centralized tech companies like BlockFi and Celsius that tried to they got a bit over their skis in terms of their financial dealings, or whether it's Bitcoin miners who levered up last cycle and then couldn't pay their debts when Bitcoin price fell. This cycle, it's more of a dilution driven price action. And that is enabled by these wide open capital markets. I'm not so sure that the end result won't be the same, which is a fair bit of a hangover for equity investors who are piling into companies that are trading at very high multiples relative to the Bitcoin that they already hold. So I think that MicroStrategy and Sailor, and there's a few other names that have kind of differentiated alpha strategies or relationships in the space that may allow them to sustain this equity issuance-driven accumulation. But for many of the companies that don't really have differentiated access to, say, convertible bond buyers or a way to source Bitcoin at a discount, I'm worried about the next few months as some of these new shares become unlocked and can be sold by some of the early funders of these new treasury strategies. So up until now, no public Bitcoin treasury company has traded below its NAV, net asset value, for any sustained period. There's one that's now approaching parity, Semler, SMLR, and it'll be very interesting to see how they react to this. So, many of these companies are raising capital through pretty large at the market programs. ATM, it's when a company just issues equity at the current market price a little bit every day. And if the stock is trading at or below that NAV, then the continued equity issuance to buy Bitcoin dilutes rather than creates value. It becomes the opposite of capital formation. It becomes erosion. So my strong hope is that companies who are pursuing a Bitcoin treasury strategy should adopt some safeguards now while the premiums still exist, and they should communicate those safeguards to the market. And I have a few ideas for them. One is that a company could announce that it will pause equity issuance if the stock trades below, say, 0.95 times net asset value for more than 5 or 10 trading days. The company could communicate that they will prioritize share buybacks in times when Bitcoin appreciates, but their underlying equity fails to reflect that appreciation. And they should also announce plans to initiate strategic reviews if the discount to NAV persists. And those strategic reviews might include mergers or spin-offs or sunsetting the Bitcoin strategy. It's almost akin to a type of living will that will give the equity buyer some confidence that they're not just going to get diluted to zero. Because there is temptation here, given executive compensation, if the incentives are not set properly for executives, that they could be rewarded on simply how much Bitcoin they own, rather than how much premium their stock trades to the value of the Bitcoin. And like nobody's going to want this dilution if it happens. So we're hoping for kind of clear communication and safeguards from management teams and boards, and hopefully shareholders can help to push that along.
This emerging pattern is deeply geopolitical. When countries struggle to roll over IMF loans without accepting harsh austerity measures, they're beginning to turn to Bitcoin not just as a lifeline, but as a strategic form of leverage. Matthew Sigel argues that El Salvador set the precedent. Simply threatening to adopt Bitcoin as legal tender was enough to shift the dynamics of negotiation. Other nations are watching closely. In 2024 alone, Ethiopia, Kenya, and Argentina all in talks, with the IMF launched state-backed Bitcoin mining programs, signaling that the playbook is evolving.
It's been our thesis for some time that the ownership of Bitcoin had been kind of overly concentrated in retail hands, and that if the asset was going to gain mass adoption, then by definition there'd be more corporates and government stakeholders that begin to get involved. So as we spoke about, the corporate side has definitely materialized, and it's being felt in the price of Bitcoin from all these buyers, and then also in the equity markets where the price action is drawing in folks who are attracted to rising prices. So that part feels very positive and new. The government participation is less overt. It's more around mining operations. So we keep a tally of the number of countries that are mining Bitcoin using central government resources. So 5 years ago, there were 2 countries, Oman and El Salvador. Over the last 3 years, that type of government adoption on the mining side has accelerated. We now count 9 different countries that are mining Bitcoin with the support of the central government. The most recent to announce was Pakistan, which it's a perfect example of the type of country that has become more aggressive in mining Bitcoin. It's a country that has a loan from the IMF that needs to get rolled over. And when you can't pay back your IMF loan and you ask for relief, they usually say, yeah, we'll roll it over, but you have to do X, Y, and Z in return. And the X, Y, and Z usually involves raising taxes. And in the case of Pakistan, the IMF actually said to Pakistan, you need to collect taxes on crypto. And crypto is not even legal in Pakistan. So they were like, oh, well, we better, create a regulatory framework. They founded a The finance minister started a crypto council. CZ joined the board, and then next thing you know, they announced that they're going to allocate 2 gigawatts of power towards mining Bitcoin and building AI data centers. So when this kind of globalist IMF comes into your country and tells you how to start running your business, Bitcoin becomes a very tempting negotiation tool in order to restore some sovereignty over your own domestic printing press, because as long as you have energy, you can mine Bitcoin, sell it for dollars every day. You don't need the IMF for that. And at the same time, you can always hold out the threat of like, hey, IMF, if you don't roll over this loan, we're going to go full legal tender like El Salvador. And they hate that. So it's very handy as a negotiating tool. Last year was Ethiopia, Kenya, Argentina, all with IMF deals, all started mining Bitcoin at the government level. And now we've got Pakistan joining the fray. So that's really my thesis at the sovereign level, is that it's an emerging market or frontier market, countries with high inflation rates, less trustworthy institutions, or IMF packages will be most attracted to accelerating their Bitcoin mining. And now with this ESG trend kind of in the rear view mirror, I think countries and companies are more willing to use what had been kind of politically disfavored sources of energy, and that'll be positive for Bitcoin as well.
The Bitcoin game has evolved beyond retail traders and crypto-native investors chasing exponential gains. We're now witnessing a full-scale institutional reshaping of the landscape. Corporations are cementing Bitcoin as a core asset on their balance sheets. Governments are beginning to leverage it as a tool for sovereignty and monetary independence. And capital markets are adapting through IPOs, equity offerings, and emerging legislation to support this new monetary era. Want more? Click this next video.